Hello, VIX Trader here for Friday, December 7th, 2018. I thought I'd cover yesterday's trading and how it could have been traded. Um, I want to show you, first of all, one thing had the market here, the spiders, which is the same as the S&P 500. You can either use SPX or the spiders. I use the SPY. And the market is close to its lows, within 3% of its lows of 255 here. And when this thing was close to, when the spider was at its lows, the TVIX was about 150, or 120, Yet we're within 3% of the yearly low, and this thing is only at 46 bucks. It opened up, I think, at 45 change, or 43, maybe it was 43 and change. I don't remember. I think it was 43 and change. So, but to show you the decay, that when this thing is gonna, when the market finally rallies, and eventually will rally, at question is at what point this thing will go back down. I said probably to $9. That's had a head and shoulders pattern here. I had pointed out that is the head, left shoulder, right shoulder, and the neckline is about 36. If it goes below this 36, doing the price level about $21 here, it's probably about 13 bucks around there, 15 bucks, and that's a high probability. And I also said, this thing tends to hit the 200-day and just keep going lower and lower and lower. So my 200-day was at 52, and I said anything above 52, if you can short, is a good price. You can hold for a little while, and I shorted at 53. So I want to see, before we traded, what clues do we have that there could be a market reversal. We need a market reversal, before this thing falls in price. And I have my indicators to give me clues. And I said the biggest indicator of the day was 267.40, which is the January low. That if it goes below the January low, the market tends to go lower. The month of January bar. This is the monthly chart. And you see, as throughout, like the Lehman situation, September 2008, broke the January low and went a lot lower. On the other hand, people were freaking out that the market could go lower, and it's a bear market. It held a January low bottom in 2009 in March, and it kept marching higher. So it needs, for it to be bullish, the market, like here in 2016, needs to stay above the January high, and we'll keep going higher. Here, all we've done all year long is just go sideways. Here's the January high, the January low, and we've just gone sideways throughout the entire layer. We've gone a little bit over, we've gone a little bit under, but pretty much we stay within this range, and I'm guessing we're going to finish that way for the year. So I said the VIX tends to be in a range now from 17 to 22, and from 22 to about 29. When the VIX hit high of about 27, and I figure that's about the high range. That gives me a clue. That's a good area of time I can short TVIX if the market rallies. So the first clue was the VIX was about 26, 27 at the high range. And I said the first bar of each chart, the first 15-minute bar, is the most important. And here's the 6 p.m. bar, 250, 2650 is a low, 2712 is the high, and you see at 9:30, 10 o'clock, it tanked, went below to hit 2620, then it started rallying up, the features. And once it goes above this 2650 area, I'm comfortable shorting the TVIX. Clue number 2. Then there's the primary bar of the day, the first 15-minute bar of the day. See how it goes sideways. It went low, below it, and you see the green bar, the 5-bar average, started moving up. And that gave me a clue the market is rallying. That if it goes above this bottom bar, I can start shorting the TVIX. And I short it. And the question is, what price? Well, when this moves up, I usually like to price either short, whether the spot is at the bottom of this bar, like right here, or right here. Anytime it goes below, and if it goes at the top of the bar, see it's going above, I go, well, that's kind of expensive for me. I like it down here. I'll short at the close, right at the green line, the 5-bar moving average. So I can either short down here or at the bar. An inverse of that would be, for example, on the 15-minute, side by side. And you will see every time, if you bought down here, you got it around here. You know, this is the spider's low is 264 at 145, so 145. The high ended up being right around here. Short it around, like I said, at 53. So didn't get the exact price, and I just kept shorting it. You know, and what I did was every time I shorted and hit down here, I closed it because it hit the bottom of the range. I was afraid it would bounce back up. So then I see it keeps going down, but then at what price would I short the TVIX? I would short it every time it hits here. Essentially, I look at it, this is forming a trend. And my rule for the close is I traded this 3 times today and still have 150 shares, 50 more shares long at 51.5 that I held on overnight, which I shouldn't have, broke my rule. But anytime it hit this green bar, I shorted TVIX and I covered down here, you know, and at the close, I shorted it right here, you know, and I kept going lower and I just hung on to it, you know, and I closed that too after hours. But the one I kept was initially, I have 50 shares here, somewhere around 51.50, was right around here actually. And I just kept it and followed down for my macro hold. But that's how you trade it. But one clue you had was what's very bearish is if, yeah, I can show on the 15-minute, I was showing how this 200 moving average is the resistance. And what happens is it's very bearish when a stock or ticker, whatever, goes above this 53 area, the resistance. It comes down, and instead of holding it and going back higher, it kept going lower, you know, and yeah, so essentially here's that resistance, you know, went above it, then it came lower. That's usually a sign of a reversal. Above it, lower. I try to explain this as best as I can, but that's how my thinking. I will put up a video later today on how the day is going to look. I generally don't trade Fridays because it's before the weekend and tweets can come out, news can come out, which are very bearish. Any kind of tweets and news tends to be very bearish for the stock market right now, and you get generally good spikes on Monday. That's one of the reasons the market sold off on Tuesday, because it was going to be closed on Wednesday, and they're afraid of what might happen. And then you see what happened with the 800-point plunge, you know, on Thursday. Tuesday, whenever it was. Tuesday was the 800-point plunge, and then we had another 800-point plunge Thursday, and it just rallied. That's the VIX Trader here. Please like my videos and subscribe. Thank you so much.